Hello, traders. It's 8:01 a.m. Chicago time here on Tuesday, the 27th of August, 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1583. Today, the market is taking a stance that is risk on. It appears that the news from yesterday that there was a conversation between the U.S. president and the highest levels of government within the Chinese government have taken place over the weekend. That news caused us to gap up. We in the S&P we tested the prior close. We found buyers and we turned up. And this morning we're gapping up. Now here's the twist. The twist is that this information was released through a tweet or something from the White House, but shortly thereafter, the Chinese government, Chinese Foreign Ministry spokesman Shuang, denied that this was the case. Was not said that they were not aware, but the market dropped about 25 points on that overnight, and it proceeded to rally. Um, but here's the thing, and again, this morning at 2:10 a.m., 3:10 a.m. Eastern U.S. time, China's Foreign Ministry spokesperson Geng Shuang says he reiterates stance that they have not heard of a weekend calls between U.S. and China on trade. Hopes U.S. can stop its wrong actions, create conditions for talks. Resolutely opposed to the mention of Hong Kong in G7 statement, confirms a Chinese-born Australian Zhuang blah 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 has been arrested on suspicion of spying and so on. Here's the thing with this. So there's a whole tweet storm and debate and whatever about how this meeting with the highest levels of government with China was fabricated to relieve pressure on the market as a way to get a quick pop higher, and that did get us that, and that most likely this is not true. This did not happen, but it doesn't matter, does it? Because for the markets, for the financial markets, we are in the business of pricing risk and value. And the fact that POTUS has come up with this says that there is a softening stance, and that's what the market's responding to. So whether it's true or not is irrelevant. Let's not get caught up in the drama and the noise. The fact is, POTUS is slightly shifting a position with China, and the market's responding to that. And so risk on today, crude popping higher up 63 cents. It's the leader of the pack, up 1.17%. The DAX is up 100 points this morning. The Euro Stoxx up 24. Interestingly, the bonds are a lot higher today. The bond futures are trading at 166.03, up a tick. That can't be right. Up, yeah, 31, up 31 ticks or an entire handle or 0.6%. And so it's kind of interesting to have the bonds sitting in among the Nasdaq and the Euro stocks and the Russell and so on, but the bonds are higher today. The 10-year note's up 9 big ticks. The only thing that is down this morning is the dollar index futures trading down 19.5 cents. And so overall, the market stance is risk appetite is higher, allocating to risk this morning, and all of this is being driven by the market's expectation that that the U.S. The White House is likely to soften its stance on this trade war and maybe back off a bit as we start to see the effects of all of this on farmers who've been really struggling and suffering, and other companies. So this is where we are this morning in the big picture. There are some things going on in Italy that we need to be mindful of. There's a potential for government failing there and a forced election. But I'll let you guys follow the news for that. As far as what's on deck for today, we got a slew of numbers, mostly low tier, the latest of which are Case-Shiller home prices. But we do get consumer confidence at 9 Central, 10 Eastern in about an hour, expecting 129.5, priors 135.7. We get Richmond Fed at the same time. And then after the market, for those so trade crude, we get API crude stock change. The prior is negative 3.5 million. So that's where we stand. In terms of what was expected yesterday versus what we got, so the primary expectation yesterday is we are likely to revert back, as I said, a trend down day like we had on Friday. It was actually a neutral extreme down, but from the news on, we had a very, very clear trend day down with no real establishment of value. And we were gapping up, and the expectation is we're likely to start to push towards 28.55 to tag the close and VPOC. And there's a strong potential that we're likely to either hold inside, which this is where I kind of broke the line right there, hold inside the range, or potentially push lower as the normal habit. The secondary scenario is a push lower to test 28.90 and hold steady on an inside day, and that's what ended up happening. The prediction was for 25 points for the entire range. That's a 1 sigma or the value area or 1 standard deviation of ranges based since the volatility began sometime in May, and we hit it almost on the nose. So in the morning, what we got is essentially what this was all the way is scenario 2. We got a push down. We tagged prior VPOC and the prior close almost to the tick. The prior close was 28.55 and a half. We went to 28.55 and a quarter. We had a normal day type. We extended the IB upwards, and at that point we had a range of 28.55 and a quarter to 28.79, which is about 24 points. Remember, the prediction was for 25 or so. And then from there on out, it was completely sideways, and that's across the board. If you look at your NASDAQ, if you look at your well, the Russell's a little bit different, but the Nasdaq's completely sideways, completely balanced, very Gaussian profile. Not a huge fan of the low from yesterday, nor the high. Relatively weak, and then later in the session on the close, which is something we've been doing lately, is to push directionally on the close in the last 2 to 3 minutes of the cash session, and we extended the range to have 27 points instead of 25, but that's well within the expectation. In addition to that, we met the IB stat, we met the overnight VPOC stat, but we didn't meet the overnight stat, which states that approximately 98% historically of all days in the S&P and many other products, including the NASDAQ and so on, the day session takes out the overnight high or low at some point in the session. Yesterday, we could not do that. The overnight session was very, very wide, driven by, that news that the conversation was happening with China and all that stuff. Caused a very wide range, and so yesterday was a resting day. Following the trend day down. Here's the trick. The trick, or the rub, I should say. The rub is that this behavior before the news on Friday was completely expected. Remember, we're looking for responsive up. We are in balance, so the market is very, very likely to respond to where the auction was and was accepted the prior day. That's the point of control, the value area, and it did exactly as expected. Okay, and then the news comes in right here, and we get this massive drop. You can see that volume was okay, and then all of a sudden we have exceptional volume right here, right down here on this bar. And so what this trend is, it's not a technical breakdown, right? It's not a technical breakdown. It is a news-driven event. The problem with news-driven events, for those of you who've been following for 11 years now or something on Twitter and maybe longer elsewhere, uh, the problem with news-based events is the SOC. This is the scene of the crime, or the point at which the auction was interrupted. So the market goes on about its merry way, exploring price up and down, up and down, up and down, and then it's interrupted by a news event, something that is planned or unplanned, and we call that the SOC, the scene of the crime, or the place where the interruption happened. And often you've seen this, there's a quite a high probability. It basically this acts almost like a gap zone. There's a high probability that at some point the market resumes that area. And so what takes place with a news event is that we don't get the usual pattern, the impulse down, pullback, consolidation, compression, and then continuation, where we try to catch. The goal is to catch the pullback. I cannot catch this. Okay, I'm not a super trader like many others are or claim to be, where you can catch this big move. I don't do that. I'm a day trader, so I don't control and definitely don't trade the size that would cause the big move to happen. But the big move is the biggest clue for me, is we get an impulse like here. And so all I do once I see an impulse is look for the pullback, trade the pullback for continuation, with the primary target being the impulse low. There's a very high probability that that low will get taken out through a continuation. So we know that at a minimum, we are likely to test the low of the impulse. So the trade for me, and I narrated this in Trading Futures with Anthony Crudelli, the premier episode of that. I showed how that works. I'm looking for a pullback to around mid or better. And then I'm looking to exit the trade at the impulse low, hold a runner, and if it pulls back and continues, I might add some more and look for it to continue lower. This is a technical breakdown. So the pattern is impulse, pullback, consolidation, or inside day, and then it starts to fail, and then we have what's called the continuation, and then the continuation does its thing, finds its buyers in this example, has an impulse up, consolidates, and continues. So this is like the Elliott wave, 3, 4, 5. ABC correction type of thing. Same pattern, head and shoulders. This is a head and shoulders type pattern. You can call it whatever you like. It doesn't matter what you call it. It's just about price and volume at the end of the day. But with a news-based event, what you can have is this thing where it moves on the news, it revalues on the news, but then it returns when the news is discounted. It returns to the scene of the crime. It returns to the scene of the crime, and then what happens from there is the auction continues as if this never happened. We saw this 2 Tuesdays ago or something, where we were trending down. We had that big up day, and then we came back the next day and we were gapping down and just continued on the downtrend like that Tuesday never happened. That's a very classic SOC, or scene of the crime type trade. And so this is where the reason I'm talking about this is the market is trading right now at 28.9675. It keeps pushing the overnight high. It is well above the midpoint of this day. So the midpoint of this day is right here. That's the area we tested yesterday, the midpoint of the impulse day, and the expectation is the market is likely to turn down and test that low from here, but it hasn't. It is actually pushing up. What does this mean? And this whole 5-10 minute explanation boils down to this: be careful being short. And I hate to say, hey guys, be careful being short. I prefer that you do your own thinking. That is an ethos that I have. That is a value that I have, that I don't want you to sit here and wait for me to tell you what I think. I'd rather have you think for yourself. It's what makes a healthier trading community, right? And so here we are pushing to this low volume node up here, and we are likely to take back the bulk of where we were last Friday. This is what it looks like. Now, yesterday I talked about it, the potential of it pushing all the way up to 2,900, and it didn't do that, or the potential of pushing all the way up to 2,900 some point this week, and that is built on the SOC. Okay, the SOC of that news event is approximately 29.23 or so, and 29.24 is the MC point of control. 29.24 is the balance point for this entire region. This is the attractive price up here. 29.24, make sure you have that on your charts. Okay, so yesterday was a balance day and we're breaking out of balance higher. This is quite bullish. Here's the overnight session. We open back up, pull back a little bit, but overall we tested the point of control below from yesterday on a perfectly balanced day. This is a Gaussian profile, complete balance, and then we start to push up higher. And so what this is saying is that we're running away from the prices we previously accepted, and the volume is pretty decent at 332,000. There's quite a bit of participation. The overall inventory is somewhat balanced, slightly to the positive side. There's a percentage I can pull up, but I don't want to bother pulling up the chart right now. The overnight inventory in price and in delta is positive. So there may be a small reversion for us to balance things out before we continue higher. So where do we go from here? I'm really rambling today. I apologize for that, but there's a lot going on. First, I'm looking for a small pullback, a small reversion. I expect that those who are holding longs into yesterday's close. Now remember, yesterday closed at the high. Closed at the high on a weak high, did not show an excess, did not show a pullback. So it's natural that we expect that the market will likely continue higher overnight. The expectation this morning is we're immediately going to take out the overnight high. I'm looking for responsive selling. I'm looking for the responsive selling to find support in the 28.88 area, impulse up, push into this 2900, 2903, and then eventually start drifting higher. Tuesday is the most likely day for a trend, Tuesday and Friday, historical probability wise, and I expect us to just balance out and start to trade up towards 29.14 on our way back to 29.24 and the SOC from Friday. Okay, the secondary scenario is obviously the opposite, an open that pushes the high, relieves some of the pressure still from buyers, impulse down, comes back to the top of the prior session, trades into the 28.80 area, attempts to push higher, and then comes down and then just tags the value area and the point of control and just rests below for a rest day. Okay. Scenario 3, and who knows what's going to be tweeted today, and this is quite likely. Scenario 3 is responsive selling, open test drive up, push right through that 2900, squeeze through the 2914, which is a weekly level, and then back to 2924. I expect this to be fairly aggressive. It can even take out this 2927 and push to 2850 up above. That's scenario 3. So if there's an open test drive up, obviously we do not short and the targets become wider. So in that situation, we're looking for 30, 35 points of range in that situation. Okay, so those are the three key scenarios. The fourth scenario is open test up, drive down, push through yesterday's value, push through yesterday's low, and start working itself back into 28.48, potentially the low we left behind at 28.34 to continue the impulse down. That would be pretty dark for the buyers as we move out of the value area. Despite the big sell-off on Friday, by the way, as I talked about yesterday, we still had a week last week inside of the prior week. Inside of the prior week. Last week did not break the high or the low of the prior week. The market is imbalanced, so it's likely to push around in this rangy type, wide rangy type of thing. The market's quite nervous of news. I'll show you what Bookmap looks like. Look at these impulses. Look at these impulses. It's very news sensitive, this market. There's another impulse there, very news sensitive. Another impulse here, very news sensitive. Okay, it's really newsy. Convergent members, as I wrote yesterday in Head Trader channel, you have a free subscription to Trade the News as part of your Convergent subscription. Make sure it's turned on. Make sure you're listening. No, we cannot trade the news as it happens, but we want to know if it's a rumor, what type of news is pushing us around. Is it a stock? Is it a tweet? What it is. Make sure you run your news feed. It's already included in your subscription, so have it turned on. For those of you who don't have a news feed, I suggest you find one, get one. The news is very impactful these days. In terms of liquidity, let's squish this down a little bit. We expect liquidity to be heavy into 2,900, and you can see there's liquidity that's been sitting here all night long at 2,900. You can see that it's quite big just above. We pushed through the liquidity that was stable throughout the session at 28.90. This liquidity was here yesterday. Actually, it's been holding steady. It's been holding steady throughout, and it's showing up today, and we busted through it with this impulse move up on volume. Okay, down below us, we now have a bid, a pretty firm bid throughout the night at 28.70. Beyond that, we start to push towards 28.55 and 28.45 in terms of bids. So as I zoom back in to where we are currently, the white line is the last print. You can see there's a little bit of stacking going on all over the book here. Okay, it's just being stacked. And of course, all of you can see this in your dome, but what you might not be able to see without CT Bookmap is how long the duration of it, how long it's been sitting here, and what the potential intent is. And with a full depth feed, this helps give us a look well beyond the 10 levels up or down. Anyway, that's that. You can get this at ctbookmap.pro. There's a 14-day trial if you want to check it out. It's an indispensable tool. It's my execution platform. Good luck this morning. Hopefully this was packed full of information. Don't be shy to listen to it again. There's a lot shared here about the SOC and how auctions play out. Good luck. Take care.